Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Let's get in some technicals now. Kiran Jhadhav joins in to tell us what he's strategizing this afternoon. Kiran, hi, over to you then. What is your Nifty call as well as specific stocks?
Basically, the positional call is pretty long, and we believe that once the 10,850 is taken off, we'll see fireworks in the Nifty. However, for the day, I believe a corrective action is on the cards. And I expect the Nifty to correct further from current levels to around 10,770, 10,765. So these are the levels to watch out for to again buy. For now, I have a short call with a trading perspective, pure trading perspective. Stop loss would be 10,820. Target would be 10,770, 10,760.
Okay, stocks?
Stocks, I have one buy, one sell. Cadila Health is looking very good on the charts. We believe that it has also broken past an important resistance at 415. Now, till the time this 415 level is held on, we believe that this stock has a strong potential to hit a target of 427, 430 in a day or two. So by today evening or tomorrow morning, we should see the stock trading around the 427, 430 mark. A short call is on NIT Tech. This is one counter which is looking pretty weak on the charts. The fall that we have seen day before and on Thursday, Friday's move, when the market moved up, this stock was continuously consolidating, which is a negative divergence on the chart. Second point to point out on the weakness is the kind of positive movement that the stock got in the morning. A lot of longs have been trapped. And we believe that this stock will see a long unwinding. And with this, the derivative data is also pretty weak. We have seen open interest addition to an extent of around 11%, which is pretty weak on the charts. So technically, we have a target of 1075 to 1062, which should be achieved today itself.
Okay, all right, Kiran, we're going to leave it on that note. Thanks very much for joining in and taking us through those technical calls. Just to give you a sense in terms of the kind of stocks which are gaining in the mid caps, and maybe you need to tread with a little bit of caution, is something like a Vakrangee. That stock is in fact locked in circuit at around 55 rupees. That stock is up around 5%. So that just gives you a kind of sense in terms of the stocks which are gaining in today's trade. Graphite India is also up around 5%, not done too badly this year after that stellar year that it had last year as well. So that stock up around 5%. Take a break. But up next, Mehrab Irani, the general manager at Tata Investment Corp, will be joining in next. That conversation after a short break.
Okay, welcome back. You've got 25 odd points on the Nifty on the downside, and we're at about 10,797 or so. There's not very much happening, and it's been that way since the morning. Take a look at what is higher. The IT index is up about 0.75%. The pharma index is up 0.5% or so. The metal index is up 1/3%. So IT, pharma, metals doing relatively better. And IT is really the top of the list with just under a 1% gain. Autos are down the most, 1.25% lower. The PSU Bank index is down nearly 1%. So autos and PSU banks on the downside. Mehrab Irani is General Manager, Investments with Tata Investment Corporation, and he's with us here on the show. Mehrab, good morning. Great to have you here.
Good morning, Prashant. Thanks for calling me.
Your sense, Mehrab, in terms of let's just start with earnings. We had actually this note from Mahesh Nandurkar at CLS this morning, putting his thoughts out there on F519 earnings, saying risks exist on the downside, so one should be cautious, but not ruling out the fact that we actually may be able to get to that 20-21% kind of numbers because of the low base in a few sectors. I mean, your thoughts on what it would mean for markets?
Yeah, if you talk about earnings, you know, the fourth quarter earnings for the companies have actually come out. So the top line growth has been almost 15%, the EBITDA growth around 9.9%, and the EBITDA margin came in at 17.3%, which was around 60 basis points year-on-year fall. but the bottom line growth was also around 14.2%. So the earnings were mainly in line with analyst expectations. Also on a lower base for certain sectors, certain stocks, they had done good. Valuations today, we are almost at 18 times forward earnings on a price to book value 2.6 times, market cap to GDP 85%. So we are still around 5% costly than long-term averages. Around a couple of quarters back, it used to be 12 to 15% higher. So, but because of good earnings growth, it has slightly corrected and we have become comparatively reasonable. But if you see a lot of the macro factors, that has actually deteriorated. Today, if we see the interest rates have started rising globally and also in India, RBI has raised repo rate by 25 basis points to 6.25 after a long term. If you see the current account deficit has actually worsened, it has become 1.9%. And with the commodities, the dollar strengthening, with the oil price increasing, with the consumption in India remaining strong, and all the trade wars which is happening between US and China, I think current account deficit may still widen maybe 2.2 to 2.5%. Inflation in India has again started rising. It is between 4.5 to 5%. Core inflation is above 6%. So there is little room for interest rates to come down. And the gap between the earnings yield and the bond yield is actually widened to 220 basis points, which is little negative. So either interest rates have to come down or the PE has to correct. So the chances of interest rates coming down are quite minimal just now. In fact, if you see the 10-year GSEC has gone up by 180 basis points over the last 18 months from 6.2 to 8%. So if the earnings don't grow and keep pace with the valuation, then can be slight pressure on valuations just now.
Okay. Meram, I just wanted to talk to you about the IT as well as the pharmaceutical space, because Sanjeev Prasad of Kotak came out with quite an interesting note today saying that they actually could be big risks when you're talking about the US markets. They could be sitting ducks if in case Trump wants to, really clamp down when it comes to any sort of trade tariffs, and Indian IT and pharma would be probable candidates for that. Do you agree, and do you think that that could be a risk to your investment, a probable, formidable risk to your investment?
If you see, pharma sector has anyway underperformed over the last 1 to 2 years because of whatever US FDA and other problems. Recently, some good news has come in that sector, but yes, the risk always remains. The IT sector has comparatively done better, but there are a lot of pressure on the large cap space. Certain small product companies are doing good, but overall there is quite some pressure over there. The rupee actually weakening is helping both of these sectors, but yes, I completely agree that those headwinds still remain, and it's better to be cautious on both of these sectors.
So how are you approaching both these sectors?
If you see, we are very selectively investing in both these sectors. So in IT, we would be more positive towards mid-cap IT and certain product companies, where our earnings visibility and growth is much better and not dependent too much about US regulations, etc. So we are investing in that fashion.
What about pharma? How would you approach
pharma, I think after this kind of underperformance which has happened and the recent good news, so we were anyway underweight. So I think we would be slightly more positive on the edge, but yes, we would obviously be cautious of it.
No, again, there would you be, because there are some who say that better to look at domestic-facing companies in pharma.
Yeah, I would tend to agree with that.
Would it be the MNCs? Because, the Abbotts and the AstraZenecas of the world have just gone through the roof.
Yeah. MNCs are doing quite good. Honestly, we missed some of them, but yes, they have been doing quite good.
Would you be buying them now, Ban?
We have to study on an individual case-to-case basis and see.
But if you benchmark yourself to sector weights, etc., equal weight, overweight?
No, we would still be underweight.
Okay. And you're saying that one of the big things for you is focus on companies which are predominantly dependent on business from India.
Yeah, that would be a more safer bet.
That would be a safer bet. Okay. So just to go back, just to rewind a little bit and to get back to the market, we were just talking before we went on air about whether the correction broadly you think is behind us. In terms of valuations, you said there's about 5% more to go.
Correct.
But markets never usually trade at fair value, right?
You are right.
So what is your sense? What is the right way for people who are watching, who may want to put money, who may want to decide whether to take profits or not, or book losses? What's your advice really at this point?
See, if you see the micro has actually improved. The company performances have started improving in a lot of sectors. So a lot of sectors are looking good. So I think people have to, and any time they have to be on a sector or a stock specific basis. So if you see certain sectors which were good are continuing doing good. Like retail-based private sector banks, they are continuing to doing good. The results have been good. The NIMs are steady, NP under control, etc. NBFCs still continue to good, except in housing finance there will be little margin pressure because of the interest rates, liability side pressure rising. If you see autos, they are doing quite good. The growth in the two-wheeler and the passenger vehicles are volume growth is between 10 to 15%. So they are doing quite good. The consumers are doing quite good. If you see volume growth is coming back in the FMCG consumer sector after a few quarters, though there is little input pressure, but the volume growth coming back and the ROE is remaining high, I think they deserve higher valuation. So I think on a stock specific, it remains good. Yes, the overall market risk remains because the macros, whether it is domestic or global, both macros have actually deteriorated over the past few months. Even global macros have quite deteriorated. For example, if you see today, the debt to equity, global debt to equity has gone up from 0.7 to 0.8%. The global debt to GDP has gone up from 200 to 250% over the last few years. So all the global and interest rates are rising, oil prices are rising. So global as well as domestic macros don't remain so good. So therefore, I think we have to play very much the micros, individual companies and sector-wise.
Okay.
Just one more thing. I don't know if you saw this news that the idea of Vodafone merger may be delayed for a variety of reasons. I mean, the telecom department thinks it's owed another around 5,000 odd crores or so. The assumption which was being made is that the sector dynamics will improve because from 7-8 players, there will only be 3 players left. If the merger is delayed, I don't know how long, it's already been over a year, but if it's delayed more, it may, for investors per se, there is only one listed player in that sense, which is Bharti. Do you have thoughts on the sector?
I cannot comment on individual stock, but yes, if you see the sector, I think it's still better to be cautious because I don't think all the problems and whatever the competition is going on in the sector is still over. I think it's better to wait 1 or 2 quarters and see how this pans out. So I would be underweight on that even as of now.
Okay. All right, Mera, we're going to let you go on that note. Thanks very much for joining in and talking to us. So that is Mera Birani of Tata talking to us about the fundamentals of the market. For the Nifty, just about consolidating at 10,800 and the mid-cap index flat with a little bit of a positive bias. Take a break. But up next, more on the markets once we're back. Stay tuned. Welcome back. Well, KRBL continues to be the stock in focus. In fact, it's extended its losses like we mentioned just a couple of minutes ago as the Enforcement Directorate has revived the Augusta Westland helicopter scam and a former independent director of the company, which is of KRBL, has been arrested. Manglam joins in with all of the factual data as well as what the company said. Manglam.
Absolutely, Ekta. So, the stock has fallen primarily on account of the report that you just mentioned, which came in the Sunday Guardian, which indicates that the Enforcement Directorate has gotten some fresh leads in the Augusta Westland case, and they believe that Mr. Gautam Khaitan has played an important role in routing the kickbacks. So, Gautam Khaitan is an independent director of, or rather was an independent director of KRBL. And within the few months of this case becoming public, he did resign as the director of the company. So on the back of which, sentimental negative that we're seeing on KRBL stock, we spoke with the management himself, and Mr. Anup said that Gautam Khaitan was an independent director between 2007 to 2013, as well as he's been arrested and he's being questioned right now. The company has no financial dealings with Mr. Khaitan himself, and this does not impact KRBL as a company. Mr. Anup himself was called in for questioning as an MD, but this was primarily in regard with Mr. Gautam Khaitan, nothing else. So he reiterates that this has nothing to do with the company. However, the stock's still under pressure. Let's hear the management of KRBL out.
Mr. Gautam Khaitan was an independent director in KRBL Limited from 2007 to 2013. And Mr. Gautam Khaitan was arrested for the Augusta West End deal, and they inquired, they called me also ED, since he was an independent director in my company, what type of transactions was happened with Gautam Khaitan. And we have given all the accounts, all the statement of accounts and everything. And KRBL is no way concerned in Augusta West End deal. Some fees of 50 lakh, 80 lakhs of legal fees company must have paid in. That's all.
Okay, welcome. So we'll take a very quick break here. We come back and we have a special guest joining us on the other side. Always a pleasure to speak with Mr. T.T. Jagannathan, Chairman at TTK Prestige. That conversation comes right up. Okay, look at the stock of Vedanta go. I mean, it's at the bottom of the screen, up about almost 5%. Sun Pharma is spiked up a little bit. It's at the bottom of the screen, about 1.8%. So we're highlighting what's moving as, in trade right now. Mr. T.T. Jagannathan is chairman at TTK Prestige, and he's joining us on the show right now. The TTK stock over the years has done phenomenally well. This year so far, it's down about 25%. That is from the beginning of this year till date. I mean, business-wise, the company had a fantastic FY18. Let's talk about what things are looking like now. So thank you very much for your time. Good morning. I want to begin with something which is being talked about in the analyst community, etc., people who track the stock closely. This is about an acquisition that TTK, that you have spoken about, actually. Just, I mean, of course, I mean, it's open. I think you in the last interview, you said that you're looking at all kinds of things. But which area are you really focusing on? You know, some thoughts would be helpful, sir.
Well, we're looking at in the kitchen appliance, in the home appliance area only, where we are good at. And we're also looking at both domestic and international.
Okay. And this would be, when you say home appliances, this would be, I mean, sort of pressure cooker segment, it would be purifiers, I mean.
It could be any of those.
Okay, have you, at what stage have you reached, sir? I mean, in terms of identifying business?
No, we're in very preliminary stage. We're looking at various alternatives. The merchant bankers have presented us some alternatives. We're looking at them.
Mr.
Nothing has been decided.
Mr. Jagannathan, it would be a branded player that you're looking at in terms of an acquisition, correct?
We are looking at branded players also.
Okay. What would the size be?
I beg your pardon?
The size. How much are you looking to shell out, or how much are you willing to shell out?
About 500 crores.
Okay, up to 500 crores.
Right. So would this be, you said merchant bankers have presented candidates? Is that what you said? They presented options?
Yes.
Okay.
Yes.
Is there a listed, I mean, one of the, is one of the candidates a listed entity?
No, I'm not going to tell you.
Okay. Okay, fair enough. There is one company specifically in my mind, of course, I mean, you wouldn't want to divulge any details at this stage, but you're saying it's at the preliminary sort of stage at this point in time. But would this...
I really don't have the details, honestly.
Sure. Would you, would this be primarily focused to give you some inroads into the rural market, sir? Because Prestige is still considered a premium player. But yeah, go on, sir.
What would surprise you is that the rural markets want only premium players. They don't want cheap products. So we are getting inroad into the rural markets with Prestige.
Okay. No, I meant price, sir. I mean, of course, I mean, they want quality, but in terms of price points, you are still considered at a very premium end.
Again, our rural markets are growing very nicely.
Sure.
And it is the premium end they want.
Okay. Can you give us a sense, sir, because you're obviously very closely linked to what happens with the monsoon, and we've seen the initial showers come through. Can you give us a sense in terms of what the rural demand is looking like?
Rural demand is looking very good actually for the first 2 months, May and June. We have had very good rural demand, and we expect that to continue.
Okay. What would that mean in terms of, say, a consolidated volume growth for you?
The total volume growth?
Yeah.
That would depend upon which product you're talking about. Pressure cookers, cookware, toasters, kettles, mixies.
Consolidated, sir. If we have to talk about it as, say, at the end of the first half of FY19 on a consolidated blended basis, what do you think your volume growth would be, incorporating the kind of rural demand that you're currently seeing?
I would find it very difficult to blend hand blender and 50,000 rupee chimney. It's not possible to blend those.
Okay. All right. In terms of visibility then, sir, if you did say a 7% revenue growth in FY18, do you think that you can probably better that in FY19 based on the visibility that you have?
FY18 growth was not 7% top line. You have to adjust that for GST.
Okay.
If you do that, it works out closer to 19% in volume growth.
So this time round,
we will do better than that this year.
Okay. So you'll do better than your adjusted GST growth of 19%.
Yes.
Okay.
Yes.
So you said rural markets are doing very well.
Yes.
Your revenue to sort of GDP growth kind of sort of multipliers, I mean, it's strongly correlated. I mean, TTK does very well when growth picks up. I guess it's true for other businesses as well. You've achieved, I mean, the multiple has gone up to almost, 3 times GDP growth?
2.5 times.
2.5 to 3 times. So, could you give us a sense? I mean, because many believe that growth is just starting to move in an upswing. Over the next couple of years, can you get to that 2.5, 3 time kind of multiple revenue to GDP growth?
Yes, we can. But what the revenue growth will be, I don't know.
Fair enough.
But 2.5 times to 3 times we'll do. Yeah.
2.5 times to 3 times. So could be 20. I mean, in the vicinity of between 20 and 25%. I mean, assuming GDP growth is
again, that would depend upon GDP growth, wouldn't it?
Oh yes, it would. Fair enough. So the split between kitchen appliances and home appliances is 50-50 right now?
No, it's actually home appliances almost nil, except for a couple of things we don't do. Cleaning solutions.
Okay.
We're not in home appliances.
No, I meant purifiers. I mean, I was putting, the air purifier, water purifiers, etc. I mean, again,
Which is it's not even 10% of our sales.
Not even 10%. So what is the outlook there? I mean, would you want to spend a lot more on advertising to push that segment for you?
We are in fact doing reasonably well in the water purifier segment, and we will grow naturally. I mean, heavy advertising doesn't pay off. We will grow the business aggressively.
You spend about 6 to 7% of your sales on advertising, right? So I mean,
yes.
Right, but you spend a minuscule portion of that in targeted for rural markets.
That is correct, yes, because there was no demand in the rural market till now. You see, a pressure cooker is useless in the rural market unless you have a gas stove.
Sure.
With government Ujjwala scheme, the gas stoves are moving in, so the pressure cooker movement has started.
Okay. All right, Mr. Jagannathan, we've completely run out of time, but we will have an extended conversation with you. Thank you very much for joining in and talking to us. So that is TTK Prestige, up around 1.8%, and that's all the time that we have on this show. Stay tuned, halftime report just after a short break.